It's December, and we have another real estate market update for you for Austin, Texas. I'm David Shapiro with the Shapiro Group, my colleague Lee Abraham, and we help local homeowners and buyers transact here and get the highest price for their home or get the best deal on their home if they are in the market for trying to buy something. So we're going to dive right in and show you what's going on here with statistics in the market. If you want to find us quickly, realestatevideohub.com brings us right to this YouTube channel. And let's dive right into December. So you can see we have about 2,400 active listings. And this is the normal seasonality trend where the number of active listings tends to decline in the winter, heading into the holidays, just less people wanting to sell their home. So nothing out of the ordinary. You can see how this has generally trended. And so the traditional trend here is what we're seeing.
And so if we break that down into a monthly housing inventory, the 2,418 active listings, however you slice the numbers, whether it's the 30-day number of pending sales, there was just over 600. That gives you right at about a 4-month inventory. The closed sales over the past month, a little bit less, 554 closed sales, about a 4.3-month inventory. Interestingly, the average over the 12 months, more robust, giving under 4-month inventory. So interpreting this, we're right at about a 4-month inventory, just over 4 months, still technically a strong seller's market, David.
Yeah, I think looking at this stat over time too is really interesting to see. So this goes back to early 2022 when the market was still red hot and you could see we had under a month of inventory. Interest rates rose, and with that, so did the monthly housing inventory. And then we've kind of been in this range, just oscillating based on seasonality. And again, we peaked at about 5 months of inventory, and here it's coming back down. So, one thing that we've been talking about for, over a year now is stability. And this is another indication of just showing kind of we're in this stable range. The bottom hasn't fallen out like some people thought it was going to. Prices have come down a little bit, and we'll talk about that, but not by some astronomical amount that I think people were expecting to see.
Yep, we can officially crown the trend the new normal, at least for now. So number of sales per month actually up year over year, down month to month, still relatively anemic compared to prior years. And as we kind of forecast into the first and second quarter of next year, personally, I'm looking for this number to jump up, and we'll get into some of the other stats. But I think the market is hibernating with the winter theme. It's good to see at least up year over year a little bit.
Yeah. It's just, I think this one, if you're looking at this from as a buyer or seller, just not as many opportunities. But if you're a buyer, there's just not as many great homes on the market to look at. Things kind of feel stale. As a seller, it's kind of the same thing. Well, there's not as many buyers. So sometimes things are sitting longer. We'll see that with the days on market. And it's just not moving the way that it was in 2021, which I think people got accustomed to. And maybe this isn't exactly the normal either, but I don't know. What do you think? Is this closer to the norm than what we were experiencing in 2021?
I think that there's a lot of room for improvement, and that this is going to be an evolution rather than a revolution in movement. But I do think there's a lot of upward pressure that's been building and is becoming pent up. And as we look at some of the other statistics, those are starting to kind of flash a little bit of a green light, David, that I think we're going to see some movement in the market towards more of a normal, pace and volume of statistics.
All right. So here we got the average sale price. So up year over year, up slightly month over month. And again, stability. I mean, if you look back, it's always interesting to look back over the 5-year horizon and just see
Right.
what has happened with pricing. And we are just consistently up for the month of November. I mean, the big shock was, things peaked in May of 2022. And so it's really hard to compare. I mean, you can see the prices were down from May of 22 to May of 2024. It'll just be very interesting to see when we get back around to May, kind of where we're at, because seasonality is hard to compare May to November. No, just up year over year, I think, is the important thing to be aware of here, and up every year, right? When you look back.
That's what I was noticing as I was scanning this chart. November of 24 may be the first, basically 5-year span where it's up every November. There is no dip. So, when we talk about stability, there's a lot of ways to look at stability. If you're in the real estate business and your income is based on the number of transactions, well, it's not stable for you. But if you own property and you're looking at your equity and your value, that's the stability we're talking about. And that's what this is showing. So for this to be the first 5-year run, month over month, every month to be up, well, by golly, that should be headline news on the national media.
Yeah. Yeah, good differentiation there between owners and professionals in the industry. And we're generally speaking more to the owners and to people that are thinking about
Right.
becoming owners. And so that's what we're speaking to generally. Days to sell, so up year over year, 28%, and up month over month. So we're kind of hitting a high watermark here, almost 75 back in January. Again, seasonality, we always expect over the holidays and in the winter things to just slow down a little bit, things take longer to sell. So we're not, I think, surprised by the fact this is going up. Lee, any additional thoughts?
I think that election is also a 4-year phenomenon that played into it this year a little bit.
Yeah, I originally thought like, yeah, nothing's going to happen until the election. Going back a couple months, people are just, they want the certainty of what's going to happen.
Right.
And now the election has happened, and it doesn't feel like it's changed all that much. Maybe people are still waiting around for interest rates. Maybe they're waiting to see, like, okay, now we know who the president is. What's he going to do? There's a lot of talk about things that he wants to do, and so I think maybe people are on the sideline. And if you think about the percentage of people it takes to kind of be on hold to really impact the market. If 20% of people that would normally be buying at this time or early next year are waiting to just kind of see what happens, like that's going to impact the market pretty significantly. So I think interest rates hopefully coming down a little bit, and then getting into the middle of next year and things kind of moving along smoothly in the economy, I think will give people the confidence to start coming back into the market. And when we talk about life cycle events, people can only stay in a not great situation for so long. Like they have their low interest rate, they want to stay in their 3 bedroom, but now they've got 3 kids and they're outgrowing it. Like at some point, they're just like, all right, you know what? I got to bite the bullet. My interest rate's going to go up 2% or 3% or whatever it is, but I have to do it because my life circumstances dictate that. And there's all sorts of life events, some positive, some not so positive, that create a need for people to transact.
Couldn't agree more. And so as we look at the number of new listings as, dipping year over year and even more significantly month to month, this is really the key to that stability in terms of pricing that we've been talking about. Fundamentals are critical for a reason, is because they're really what drives the market, supply and demand. Well, we've shown the number of closed sales, pending sales all being down. If the number of new listings were going up, then we'd be really looking at a different dynamic. But the fascinating thing about this market, David, we've mentioned it a number of times, is that supply and demand seem to be in lockstep with each other. And that's why we have the stability that we do. I am anticipating that the demand is going to be picking up more rapidly than supply as we get into the first and second quarter of the year. And there's a couple of other stats here that kind of leading that indication to me. Bottom line, new listings are down. Great. As long as you own property and you're looking to sell, when you're ready to sell, less competition, more demand relative to your property.
And then the sales price to list price ratio, relatively flat, right about 97%, this is kind of that range that we've been in for a while. And I think, what we've been talking about the last couple of months is this is pretty standard, very stable. And you can see the difference between what it was in the over 100%, which was the abnormal, versus going back to 2019. Even 2019, I mean, it was a pretty strong market. I think historically we've probably been closer to 97% than 99%.
Yeah. And just the fact that it's up a little bit, I think, having been paying more and more attention to this statistic over the past year, year and a half, is that's telling me that even though days on market are up, it's not necessarily impacting the final negotiated transaction. And so the sell price list price ratio is up. It's telling me there's some demand out there, David. I'm really feeling pent up demand as we get into the first couple quarters of the new year.
Yeah, I mean, it's like hard to imagine when you go look at these anemic number, or is it anemic sales per month numbers, right? Like there's got to be pent up demand, and unless all of a sudden people have just decided, nah, we don't like Austin anymore, which I don't think is the case. There's still companies moving jobs here. People still seem to love the city. Lots of tourist and festival events and things happening in town. So I think Austin is still the place to be. We have so much going for us here. We could go over that for an hour probably. So yeah, there's definitely some pent up demand, and I think we're going to see that at some point, probably next year. Hard to know. Is it going to be Q1 or is it going to be Q3? But at some point.
Absolutely.
All right, so let's talk about the inventory barometer. This is our favorite stat for real time, kind of seeing what's actually happening. A lot of these statistics are lagging indicators. This one is the closest we have to a leading indicator. And so you can see we're looking at the number of new listings each week and the number of pending sales, and then coming up with a percentage. And so if you look here, here's the 100% line. So anything above, so all these weeks here, we were building inventory. There's more homes being listed than being sold. And in the last 2 years, there's just a couple troughs here where there was actually more sales than there were listings. And look what we got here over the last 2 weeks. We're below 100%. Lee, anything you want to comment here on this?
Well, just as we've been, poring over this chart for the past few years, to me, it's a great indicator of the market dynamics, the supply and the demand. But David, it's the next screen that I'm even more fascinated with as we get into it, which is, okay, great. You've got new listings, you've got sales. The net result is either more or less listings based on that math. But, oh, by the way, there's a bunch of listings that are either being withdrawn or expired that need to get subtracted. That's why we've seen that actual number of listings at the beginning of every month, the first slide that we do, has been going down. And you can see all of the weeks that have a net in a yellow highlight are weeks where there were fewer listings at the end of the week, largely because of the number of withdrawn and expired listings. So this really is the secret sauce of our equity stability. And it's really fascinating the way the Austin market is built, because we talk about those life cycle events driving people buying and selling. But it seems that, at least up to this point, that a lot of our homeowners have some discretionary timelines in their life cycle events. And if it doesn't make sense to sell now, they're not going to sell for a lower price. And that's another reason why we've had price stability. So I think that this group of expired and withdrawn listings is fascinating, and it really is telling the story. So bottom line, David, fewer listings at the end of the week, at the end of the month, at the end of the quarter. That's good for equity. And I'm telling you that you sprinkle a little bit of pent up demand on a underpopulated inventory, you're looking at rapid price appreciation.
Yeah. I think the standard price appreciation in Austin, I was just talking to an economist at an event, is, over like 30 years or, longer, it's like 3.5%. Of course, over the last 15 years, it's been higher than that. And I think we get back to the 3.5% to 5% appreciation, but only after there's an initial bump, because
Right.
Once the market comes back initially, we're going to see a 10% bump, I would guess, in pricing, and, a huge bump in activity. And so once that we get that initial bump, then I think we kind of level out in that 3.5 to 5% appreciation range. Now, of course, if they drop interest rates below 5%, then that can go above 5% appreciation. So there's a lot of factors at play here. People often look at there's lots being built in Austin, and it's all relative. There's not enough based on the amount of need that we have. But also, I think it's good for for the community that we have a lot being built. It puts downward pressure on pricing, so we don't turn into a San Francisco, a New York, a San Jose. Although New York does build a lot, but San Jose is probably the epitome of that, where they barely build anything and prices are just through the roof. Like, we don't want to be that. We want to have affordable housing for people, and the best way to do that is not necessarily through these programs where people have to apply and get qualified, sometimes referred to as a capital A affordable program, but just that we have lowercase a affordable housing, because there's so much being built that it allows the pricing to stay, somewhat affordable. So of course, that's a polarizing topic in town about affordability. And people that already own homes, they want prices to go up. And, I would say I think it's good for everybody to keep prices somewhat affordable with, a moderate appreciation level.
So, David, this is simply showing the graphical representation of the weeks that were highlighted in yellow. They're all below zero. And it's just another way of looking at the actual absolute net growth or retraction of the market, just backing up the numbers that we're talking about.
Okay. And then we got mortgage rates. So you can see the range here kind of sitting right in the middle over the last year at 6.7% roughly. Any thoughts here, Lee?
Well, we like to see as practitioners that the change over the 1 week is down ever so slightly. That's great. This is what we're going to be looking at, I think, for quite some time, David, is basically this range.
We're expecting another 1/4 point rate drop in the near future from the Fed. We'll see how that flows towards mortgage rates. And I would be curious if the new administration tries to do something, knowing that this is a big factor in affordability, tries to do something to lower rates. What I would like to see would be that they do some sort of incentive for builders, so that builders, because basically, if you want to work on affordability, like I was saying, make it more affordable for builders to build. And so one way you could do that is offer, super low or maybe even 0% interest on builders that are building in maybe in certain neighborhoods or just overall. I guess you want to do it in certain neighborhoods, maybe not for the luxury neighborhoods. So that could be something that could help bring down the cost for building, and then therefore hopefully allow builders to build more. Won't necessarily impact. I haven't heard any talk of that. I just think that would be a good strategy. But it'll be interesting to see if they do try to do anything to impact this. All right. Well, you can find us there. Again, our advice, if you were coming to us looking to sell, which, go ahead and reach out to us if you're thinking about selling and we want to talk about your home. Remember, real estate's hyper local. So we really want to dive into your neighborhood, your property, and really put together an analysis there. But generally, our advice is, hey, if you can wait till the new year, wait till past the holidays, that's generally going to be better. Of course, if you can't wait, there's still people out there buying in December. So it's not like nobody's buying. And then for buyers, this is a great time of year. Some of my best properties I've picked up have been in this holiday period. So if you are thinking about buying and you're like, oh, do I buy now? Do I wait till next year? We think this is a good time. Of course, early next year, it's hard to know. There's generally, it picks up though. My experience has always been it picks up after the first week of January. I just kind of chalk it up to people set a goal. I wanted to buy a home in 2024. It didn't happen. They kind of reassert that goal in early 2025. The new year hits. They got past the holidays. Like, all right, let's make it happen. And they get out there and force and start looking. And so I wouldn't be surprised if we saw an uptick in January from activity, just people going after it after the holidays. So better to try to get something under contract now if you're a buyer. And if you're a seller, better to wait and hope for that pop in January. So if you have any questions, go ahead and comment down below. We try to answer all those questions, and don't hesitate to reach out if you want to chat with us about buying or selling. Thanks for joining us.
Thanks, everybody.